Good day, ladies and gentlemen. Let me welcome you to this class on the fundamentals of public financial management. The topic is actually aimed at providing the foundation for the course public financial management. Hence, in this topic, we are going to look at the basic concepts of public financial management, as well as examine the ingredients, the key ingredients in those definitions. Then we look at the scope of the course public financial management. We shall also examine the key objectives as well as the targets of public financial management. So essentially, the objective of this lecture is to lay the foundation for the course public financial management. So once again, you are welcome. So let us start by defining the concept of public financial management. Public financial management have been defined variously by various authors. Here, let me start with the definition given by Lawson 2015. Lawson 2015 defined public financial management as a set of laws, rules, systems, and processes used by sovereign nations and subnational governments to mobilize revenue, allocate funds, undertake public spending, and account for funds and audit results. While Argo, in its own definition in 2022, he defined it simply as the flow of money or financial resources through organization. So definition here actually focus on public spending and public allocation of resources. So other definition here was the one given in the Public Financial Management and Control Law as contained in Article 3 in the first section of that law. It states that public financial management refers to the legal and the administrative systems and processes that will ensure the effective and efficient utilization of public resources in accordance with the standard defined. So this means that when we are dealing with public financial management, there are standards that have been set. Now, how do people work with public fund, raise money, spend such money in terms of public fund, both the subnational government and the central government, in line with defined standard, so as to be able to achieve some predetermined goal. So from those definitions, we can actually see that PFM, that is public financial management, is therefore the discipline that focuses on management of public resources. That is, it focuses on the allocation and use of resources collected from the economy. It actually deals with the acquisition and disposal of resources by government. Acquisition is collection of resource revenue, disposal is expenditure. So public financial management actually deals with the collection of sufficient resources from the economy in an appropriate manner, along with allocation and use of these resources efficiently and effectively. So you must collect resources in the most appropriate manner. If it's through taxation, when the tax go beyond a particular level, like we are going to see in taxation, when you're dealing with Lafia Corp, by the time you exceed a particular level, then further tax will begin to have some detrimental effect on the economy. So when we are dealing with allocation, when we are dealing with mobilization, when we are dealing with acquisition of resources, it must be in appropriate manner. So on the whole, the concept of public financial management centers on how government raise revenue, spend such revenue in the most efficient and effective manner. So the public financial management is actually an instrument for implementing public policies, which include economic growth policy for economic growth, poverty reduction policies for less developed country like Nigeria, macroeconomic stability policies, income inequality reduction policy, employment generation policy. So when resources are actually utilized in the most efficient manner, of course, it will lead to growth, reduce poverty, and of course, to ensure stability in policy and income inequality. Because income inequality is actually very important because, like I always say, when there is high level of income inequality, then there is risk, there is insecurity. I want us to pause for a little while and take a look at this class assessment, which I want you to do on your own. And it says, in your own words, explain the meaning of the concept of public financial management. So, scope of public financial management. Now, let us take a look at the areas covered by the discipline public financial management. So, public financial management covers the following areas. One, sources of government revenue, that is how government raise fund. Two, public expenditure management, how is the public expenditure or public revenue expended. Three, preparation, implementation, and control of public budget. Here covers the budget cycle. Four, public investment decision and capital structure. How do we take decision on investment? And if we decide on what to do, how do we raise the money? Capital structure. Then lastly, accountability reports and final accounts. This has to do with audit. So now let us look at the general objective of public financial management. Broadly speaking, we have four basic objectives of the discipline public financial management. And this include one, to provide tools for understanding, analyzing, and sequencing budgetary reforms. Two, to introduce the importance and rationale for sequencing and scheduling public financial management reforms. Three, to provide tools for maintaining adequate level of fiscal discipline. Four, to provide direction for the improvement in the management of the flow of resources through government and its agencies. So these are the general or the broad objectives that PFM seeks to cover. So what are the specific targets of effective public financial management. If our financial resources are effectively managed, what are the targets that we tend to achieve? These are as follows. 1, prudent management of public fund. 2, general efficiency in operational management. 3, efficient treasury management. And 4, timely and periodic review and performance evaluation. So these are specific targets for public financial management. An efficient and effective public financial management will be aiming at meeting these targets. Because by the time these targets are met, you discover that the resources will prudently manage and the result will be very, very interesting. So far, I'll be able to take you through the basic fundamentals of public financial management. We are able to define the concept of public financial management. We know the basic ingredients in the public financial management. We are already aware now of the targets, of the scope of public financial management. And as such, if we are able to understand all these concepts, then a proper foundation will be laid for this course, public financial management. So I will leave you with this tutor mark assignment, which I want you to do. There are 3 questions there, which I want you to do and submit before the next class. It's very interesting, and I want you to actually try to relate them to the Nigeria economy. So thank you very much for your time. Thank you until I come your way in the subsequent lecture. Have a blessed day. Thank you.